In the month of September, we saw a lot of green. The biggest thing by far that led to this was the Fed interest rate cut of 50 bips as opposed to 25. Um, this might have been delayed. Maybe the Fed took too long. We don't know. But this started our Fed cutting cycle. So that means all our things tied to interest rates, our mortgages, our loans, our bonds will start to come down. Our money markets will start to come down. We've talked about this before. But this started the cycle, and the market responded strongly to that. So we've been trading down to sideways in the S&P since about July-ish, but now we hit all-time highs, and we're up about 20% or so on the year. Everything's kind of going that way. Everything's trending. The basis of this Fed cut rate was predominantly around unemployment, that the unemployment ticked higher than they thought. But at the end of the day, historically speaking, our unemployment is at a good spot. If our unemployment is at a good spot and people are getting money in their pockets, they're going to go spend that money. If they go and spend that money, our companies do well. If our companies do well, our stocks do well, right? So good news on the horizon. There is a continued transition or broadening within the tech sector, and actually utilities are starting to rise, primarily because we need energy in order to have the infrastructure to support all this technology, all these data centers, everything that's going to be tied into AI. So that's a bit of a hot play right now. And as interest rates come down, small cap companies will reap more of a benefit because they are more interest rate dependent. As we look forward to the rest of the year, things look good. That election is going to play a big part. Obviously, the war is going around in the world, but on the whole, in the short term, things are looking good. Thank you guys so much for watching, and I'll see you in October.